Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions Market Insider TV. This is our opening commentary, and it is Friday morning, May the 30th. Thanks for joining us here this morning. We're taking a look at our trading day ahead. I will be on RFD TV this morning talking about the markets and getting you prepared for the trading session. So hopefully between this broadcast and 8:15, we're up and ready to go when that bell rings at 8:30. Grain markets have closed here for the night session. Dollar index a little bit firmer, while natural gas and crude oil is down. Crude oil finding some pressure this morning. OPEC is reportedly set to raise production by more than 411,000 barrels per day beginning in July, and that has put some pressure against that crude oil market, which when I came to work, it was trading higher on the session. Now we have the market trading a little bit softer. Stock market is weaker here this morning as well. Futures fell this morning. President Trump says China has violated their trade deal with the United States. He long tweet had posted that he was happy with pulling back some of these tariffs because their country was struggling so much, but China has failed to talk with the United States to reach a trade agreement, so he is unhappy with them, and the market is down in reaction to his comments. Gold and silver is lower as well, while corn ends mixed. December corn continues to bounce off that 439.5, 439 and a quarter area. That is a 78% retracement, as we talked in our closing segments. That's a key technical area, and we ended a half cent lower, 3/4 higher in July overnight, while beans were down almost 4 to 5 cents. Comments about China violating trade agreements, I think, is a concern for demand for soybeans, while oil down sharply this morning once again, and meal a little bit higher as spreading against the market there. This oil dragging soybeans down, no doubt. Wheat ends mixed, half lower. Chicago, Kansas City, a quarter higher, and Minneapolis, the spring wheat, the traditional contract, 3 3/4 cent gains in the night session. So let's talk more about these markets in here. I want to give you our website once again so you can follow us on Twitter and sign up for our YouTube series and all kinds of other information. Sign up for our daily newsletters. That's MidwestMarketSolutions.com. All right, weather forecasts continue to look favorable in the 6-10 day. Drier conditions for the eastern belt this week that should allow for resumption of planting. 6-10 day is warmer and drier than normal. And this is all beneficial for the crop and for development. We've seen some pressure against corn and soybean values this week as a result of this forecast. The weekly export sales that were out this morning were winding down this old crop marketing year. So negative 4.7, basically we rolled sales out of this old crop and into the new crop, which were a robust 26.1 million bushels. We've already reached the USDA forecast. So even if we have some net cancellations, it shouldn't make a difference to the USDA annual forecasted numbers. Old crop corn at 36.1 million bushels, new crop at 1.2. So nothing outstanding here. These are routine numbers at best for old crop corn and beans, with old crop beans at 5.4, new crop at only 1.2. As I said, routine at best, nothing great or outstanding. Our normal slowdown is continuing as Argentina and Brazil is continuing to push product into the world marketplace. The unknown destination category canceled about 2.7 million bushels of corn and about 500,000 bushels of soybeans last week. Net beef sales were 14.7, shipments were 12.7, and pork sales were 30.5 with shipments at 28.9. Again, these are routine numbers, nothing that is going to really substantially move the market. We did see cash trade starting to develop yesterday. Light to moderate Fed cash trade in the South, 221 to 223. That's $1 to $3 better than a week ago. And in the North, we're 234 to 235 on a live basis, but dressed 368 to 375. So that's $3 to $10 higher dressed and $3 to $5 better on a live basis in the North. These are some red hot cash markets yet. USDA steer carcass weights, they moved lower last week, 7 pounds to 938 pounds. That's 17 above year-ago levels. These carcass weights have been bouncing around the last several weeks. The fact that they did move lower just tells us we're putting some cattle through at these higher price levels. And if we continue to see cash jumping like this, no doubt we'll be pulling cattle a little bit further ahead. We're still heavier than a year ago, so it's not like we're selling them at very light weights. As it's very profitable if you have these cattle in the pens to be selling them right now, buying them and then trying to lock in a price that is another story, much more difficult. All right, have a great day, everyone. Good luck, good trading. As always, reach out to us. Be glad to talk markets, strategies, open an account with you. This has been Brian Hoops. Talk to you soon.